All right, today we're diving into a fascinating case study. We're looking at a property that, on paper, should be an absolute slam dunk investment. I'm talking about a premium condo that pulls in fantastic rental income. But, and this is a big but, its value has basically gone nowhere. So we're going to unpack this whole contradiction and figure out what's really going on.
So on one side of the coin, you have this property, Residensi Sefina in Mont Chiara, and it is an absolute fortress for rental income. I mean, it's practically built from the ground up to attract the best tenants and churn out consistent, way above average rent. If you're an investor who's all about that cash flow, this thing looks like a dream. But here's the puzzle, right? This is what really got our attention. If it's such a rental champion, if you've got tenants lining up to pay top dollar, then why has its capital value, the actual selling price, gone basically nowhere since it was launched? That's the mystery we're cracking today.
Okay, so let's get specific. This whole paradox is playing out at Residensi Sefina. It's in the very prestigious Mont Chiara area of Kuala Lumpur, and it was built by Sunrise, who are, one of the biggest and most respected names in the game. So when you look at the brochure, everything just screams premium investment.
And I mean, just look at these credentials. They're pretty much flawless. It's freehold, which is a huge plus, means you own the land forever. It's low density, only 245 units, so it feels exclusive, not like a giant crowded tower. And again, it's backed by a top-tier developer. By all accounts, this thing should have been a home run.
So, let's start with the good news, because you have to give them credit. As a rental property, this place is an absolute powerhouse. The developer's strategy was so targeted, and man, did it pay off. See, the developer knew exactly who they were building for, wealthy expat families. So what do? They built huge units, perfect for families with kids. They put it right next to the two best international schools in the city. You combine that with the freehold status and the low density, and what you've created is the perfect rental machine for a very specific, very high-paying group of people.
And the result of all that smart planning? A stunning median rental yield of 5.42%. Now, to put that in perspective, that is a very strong return in this market. This property isn't just getting rented out. It's generating serious, consistent cash for its owners. It's an income machine.
Okay, so if it's such a cash cow, what's the problem? Well, this is where our story takes a really sharp turn. Let's flip the coin over and look at this growth conundrum. This is the million-dollar question, isn't it? We have proven super high demand from tenants who are happy to pay a premium. Now, normally that kind of demand would attract other investors, right? They'd see the high yields and start bidding up the property's sale price. But for some reason, that logic just completely breaks down here.
The data really tells the whole story. It launched at around 740 ringgit per square foot. Yeah, it took a dip during COVID like everything else, but today it's sitting at just 774. We're talking 4 years later, and its value has barely even budged.
A total price increase of just 4.6% over 4 years. I mean, in the world of property investment, especially for a brand new premium project, that's just incredibly sluggish. The growth, it just isn't there.
So why? What is holding this property back? Well, the answer is in this subtle but really powerful detail that the market has clearly already figured out. And that's the difference between having a prime postcode and being on a truly prime plot of land.
And here's the key lesson for any investor, really. The market is smart. It looks right past the glossy brochures and the fancy address to see what the reality is on the ground. And in this case, that reality came with some pretty significant drawbacks.
And these, right here, are the growth killers. Yeah, it has a Mont Chiara address, but it's physically on the fringe, right next to a much less developed area, and that just kind of hurts that luxury feeling. It's also completely car-dependent. You can't walk to public transit, and it gets slammed by the area's notorious traffic jams. The market sees all this and applies a heavy, heavy discount.
And then, on top of all those specific issues, you have this bigger force at play, market saturation. The thing is, Mont Chiara is just flooded with luxury condos. There is so much supply that it puts a hard ceiling on how much prices can grow. It doesn't matter how great your one project is, you're always competing with dozens of others right next door.
So what we have here are two completely different stories, right? A huge rental success and a pretty big growth disappointment. Let's bring it all together and figure out what the final verdict is for anyone thinking about an investment like this.
And this really puts the whole contradiction in a nutshell. On one side, you have the bull case, a fantastic 5.42% rental yield driven by that perfect tenant profile. But on the other side, you have the bear case, a tiny 4.6% appreciation because of that fringe location and a totally saturated market. They are two sides of the exact same coin.
In this quote from the original analysis just says it all. This is a buy and hold for income asset, not a flip and gain asset. What does that mean? It means you buy this thing to collect rent year after year. You do not buy it expecting to sell it for a big profit in a couple of years. It is purely an income play, not a growth play.
And really, at the end of the day, this whole case study shows that there's no such thing as a universally good or bad investment. It all comes down to your goals. So the question is, for you, what's your game? Are you playing for steady, reliable cash flow to fund your lifestyle, or are you chasing that capital growth to build your wealth over time? Answering that question is the first step, and it's what determines whether a property like this is a contradiction, or maybe, just maybe, a perfect fit.